Anders. It's been a long evening, but it appears that there's a clear winner now in the US election. Your comments on that?
Well, it looks like a very strong showing for Donald Trump. He's on the path to winning the presidential election very broadly. There are some states that are uncalled, but he is clearly in the lead in most of them. The Republicans already have a majority for the Senate. The indications are that they could even go up to 55 seats, which would be giving them a very strong position. The House of Representatives are still open, but the Republicans are clearly in the lead. So Trump and the Republicans have done much stronger than opinion polls and forecasts were indicating, and it looks like a very broad red sweep in the US election.
If we think about the markets going forward, it looks like they're up quite positively to start out.
Yeah, I think this is going to be supportive for the stock market. First and foremost, the uncertainty is now gone. We normally have a bit of a rally after a US election. The standard is 9% since 1949, and the last two elections actually boosted stock market with almost 20% up to year end. The fact that Trump will cut corporate taxes falls directly down to earnings per share. So that has an immediate impact on the stock market. His tax cuts, deregulation will also boost the US economy. IMF is forecasting 2% for next year. I would say that we're now more likely to see 2.5% to 3%. So both growth and tax cuts are supportive for the stock market. We could be a bit worried on the tariffs, but that obviously depends on how Europe will answer. The normal impact from tariffs are slightly smaller than people expect. So it is a bit of inflationary, but I wouldn't exaggerate that.
Specifically, if we think about the S&P 500, what do you see happening there?
Well, I think the S&P 500 is going to be supported by the US election result and by the policies that Trumps are indicating. It will be particularly strong for tech with really good quarterly reports behind us. Oil is going to be benefiting a bit. Slightly higher interest rates are also going to be supportive for the banking sector.
Yeah, I was thinking interest rates and then also the US dollar. What do you say there?
Well, I do think that we will have to get used to the thought that the 10-year will hover around 4%. We've already seen a bit of an uptick and then a bounce back on the 10-year. I do think that Trump's policies are slightly deflationary, and we also might see the deficit remaining fairly high. And I mean, for next year, the US debt level is going to hit 125% of GDP. So on the risk scenarios, I do think that higher US interest rates are one of the big drawbacks and one of the more important risks for the stock market. So the longer end of the yield curve will remain fairly high.
And will we see a very strong dollar going forward now?
Yeah, I think stronger US growth and higher interest rates normally means that the dollar is going to be strong. It is already very strong, so I wouldn't see a huge upside, but it's pretty clear that the RMB and the euro will see a bit of a depreciation after the election results. And if you look at Fed, I think we now see a clearer floor on the rate cuts, maybe in the range to 3 to 3.5%, because Trump is going to boost the economy. The tariffs will be a bit inflationary. So in that environment, if you have 3% growth and 4% unemployment, you could really ask the question, how much rate cuts do the US really need?
If we turn to Europe, what do you see for Europe with a Trump win?
Well, it obviously depends on how Europe answers. If Trump is threatening with a trade war and Europe responds with a trade deal where we would import more LNG, more oil and more defense equipment from the US, it might not be that harmful. If we retaliate with more tariffs, it's pretty clear that European tariffs are as bad for the economy as US tariffs. And I don't think we should ride around too much on our high horses, because Europe's tariffs to the US are higher than the US tariffs to Europe. In the sector-wise, this is probably a bit good for the banking sector. It is clearly having a negative impact on luxury cars, because Porsche, BMW, Mercedes, Ferrari are the ones that are going to be hardest hit if we see Trump implement tariffs against Europe. If I look at the Swedish economy, I'm not that worried. The krona has weakened a bit. The Riksbank is going to cut rates on on Thursday. We are also likely to see continuous expansionary fiscal policy, and the competitive situation is really good. So I do think that this result doesn't change the very optimistic trajectory for Sweden. We are likely to grow 2% 25 and continue to do that up until 2030 if you look at the IMF forecast, which means that Sweden actually, together with Ireland, of the advanced countries in Europe, will actually have the strongest growth trajectory. And I don't think the US election is changing that.
Emerging markets then, where are they with a Trump win?
Well, it's a bit complicated. We can see in the stock market reaction that the Middle East is a winner. Clearly, Saudi's link to the US will be stronger. Iran will be very, very cautious going forward. The best thing they can do is to hide under a stone for the next 4 years, and this implies that the risk of oil disruption in the Hormuz Strait or the Red Sea is actually coming down a bit. So the Middle East, I think, has a beneficial impact. If you look at Southeast and Southeast Asia, I do think that it's a bit of a mixed bag. They have very strong growth in Southeast Asia and also in India, obviously. I would assume that Modi is a kind of a upbeat mode today, because this implies that India has a very strong ally in the White House. If we look at Central Eastern Europe, I would be a bit more positive also. I do think that this will provide continued support for markets like Poland and the Czech Republic. The biggest loser is probably LATAM. They are hit with a double whammy. First of all, the trade tariffs, and if we also see the tariffs hitting the Chinese economy, Brazil and Argentina are more vulnerable to that, given that they have such a high export share to China. So a bit of a mixed bag. On the positive side, Middle East and Central Eastern Europe. On the more neutral side, I would say South Asia and Southeast Asia. On the troubled side, China and Latin America.
Thank you very much for that update. Lots of interesting information coming very quickly, so we need time to digest, and we hope for an update again very soon from you.
We absolutely need to digest. These are early conclusions, and we will see how this plays out in the different markets. But I think the main message is that this is a reduced uncertainty for the stock market, and that we're going to see supportive development for S&P 500 and other markets.
Great. Thank you very much.